You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com, and co-hosts, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com.
All right, everybody, that rockin' music means it's time, yet again, for the Option Block, everyone's favorite bi-weekly source for all things options related. My name is Mark Longo from theoptionsinsider.com, as well as from a little thing we like to refer to around here as the old Options Insider Radio Network. You guys know the story by now. 13 programs on said network, including over 400, pushing 450 archived episodes of the Option Block. I'll get to it a little bit later, guys. There's a listener who wrote in saying he's listened to everything on the network, including all of the Option Block. But we'll get to that madness forthwith. Where can you find all of that crazy, crazy content? Well, of course, the mothership, the flagship, theoptionsinsider.com, as well as iTunes, Stitcher, Aha Mobile, etc., and so on. If you have a place you like to listen to audio, chances are we're there. And if we're not, let us know. We'll make sure it's on there. And, of course, all of that can be avoided if you want to just grab our mobile app, available for iOS, Android, and the Fire OS. No shortage of ways for you guys to download and stream the program till your heart's content, and then fire off your questions. We've got some good ones coming in from you guys today we'll get to in a little bit. But first, let me introduce the rest of my partners in crime here on the old program. First off, he is the devious and dastardly rock lobster himself, beaming in from the hinterlands of Maine, Mr. Andrew Giovinazzi from OptionPit.com, as well as myriad endeavors on the old Options Insider Radio Network. Mr. Rock Lobster, welcome back to the program, sir.
Thank you. It's good to be continually endeavoring here on the Options Insider Radio Network.
You do have myriad endeavors. So listeners, if you can't get enough of Andrew on this program, check out, of course, his daily sojourns there on Options Oddities. He pops up once in a while on Volatility Views. He's all over the place. So, and if you can get enough of Andrew, well, then maybe just listen to those programs sparingly. All right. And also joining us on the old program today, you know him, you love him, as Uncle Mike Tusaw from RCM Wealth Advisors /RCM Alternatives. Uncle Mike, welcome back to the Option Block, sir.
Always good to be here, and I don't see how it's possible to get enough of Andrew. He's on all these shows. You guys should listen to more shows.
There you go. That's the answer I like to hear. Listen to more shows. And if you can't get enough of Uncle Mike, maybe we'll figure out something for you guys, too, a daily dose of Uncle Mike in your earlobe, something along those lines. Send us your suggestions, what the Uncle Mike show should be, and we'll see what we can do to make it happen. But now, with the team assembled, we're going to dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, that music means it's time once again for the Trading Block, the portion of the show where we break down what was interesting, what was going on, what was catching our eye in today's activity. A pretty broad green day across the board. Most of the major indices up about 0.5 percentage point or so on the day. The S&P squarely in the middle there, up about 0.5 percentage point or so. On the day, the Q's up a little more, about 0.75 percentage point. The Dow, ever the laggard, only up about 1/3 of a percentage point or so. And the VIX cash, Mark's not here, so I won't quote a percent just to drive him crazy, down about 0.75 of a point to about 13.25. So a few interesting things to parse. The Fed, of course, people watching that and perhaps expecting some things out of that. But of course, at the end of the day, I think we all know they're kind of punting at this point unless some bizarre surprise was on board. So that really didn't drive a lot of paper, perhaps as some people thought it might. But aside from that, Mr. Rock Lobster, we'll start with you. What really caught your eye in today's activity, sir?
And I think Tucson called this earlier. I think he had some exposure, but China, holy gosh. Realized volatility, like one-day realized vol in China is like 75%. In Hong Kong, in the FX, like all the ETFs, just massive craziness going on there. Crazy. Hong Kong, if you look at like the Hong Kong index, the EWH, I believe, is an ETF tracking here. It's only up 20% in the last couple of weeks. Hong Kong, not a small market. So that has been the most, I'm just going to say, insane thing we've been watching lately. Just
looking here, the EWH is about an implied vol of about a 28 or so on the front month in May. Maybe a little bit farther out, it gets a little bit steeper. Is that what you're saying? Or?
Oh, no. Well, the implied vol is 28, but it had a 5.25% move today alone.
Are you saying vol of vol? I see what you're saying. Okay.
Realized vol is like, it's 90% today. And yesterday it was just as bad. So basically what's happening is...
Who cares about realized vol, Andrew? I mean, seriously. This is an implied world. We're all living in it.
Sorry. Anyway, but I guess apparently there's been some rule changes where mainland Chinese can invest in Hong Kong, and somehow that investment in Hong Kong is creating some sort of virtuous circle. Anyway, and it's flying. I don't know how it's going to end, but when you have, I mean, can you imagine if the SPX decided to take off, 20% rally in 3 or 4 days? What the heck would that be? I mean, this is not a small market anymore. China is massive. So
it kind of makes me wish they hadn't punted last year on listing a lot of options in China last April. About exactly a year ago, they're supposed to list a wide variety of broad-based index and equity options, and it kind of fell through for the most part. And so imagine if we had a lot more tradable products over there to actually trade some of this rather than our vague options on our ETFs.
I think it would. And, I've had a couple of clients who there was demand from Chinese investors to, understand there's no real option teaching going on over there, which is kind of hard, or it's growing, I guess, but it's a nascent business, not like it is here. But we've had, students, Chinese nationals, we've taught them about, basically that option pick gone through the education process, and they basically take it and just convert it into Chinese, and on they go. So
that's a booming business. There are several businesses here in Chicago that just do that. They just educate clients in futures and options from mainland China. In fact, I think if you ask the SIBO why they invested $1 million more so dollars in revamping their Options Institute, a lot of it was with an eye towards bringing in classes from China. So there's huge appetite for education over there, and very few people who can deliver it, as you might imagine.
As far as I've seen, I mean, Mark does a class at the SIBO every week. Not every week, I'm sorry, about every month. I think that's – but anyway, all I know is there is huge demand for stocks there right now what can you say? In a crazy way. All this talk about Chinese recession and this talk about QE – or they just lowered rates a little bit and tried to loosen money up, and all of a sudden the market took off. But I have to say, I think this is there's a mechanical thing going on with mainland China. At least that was our discussion today in the chat room. We're looking at some of the, trying to just divine the snippets that are coming out on that. But that to me is the biggest thing besides the VIX trading.
Yeah.
Looks like it's going to dip into the 12 handle tomorrow if this sort of sideways action keeps going.
And Mr. Tusaw, what caught your eye in addition to the explosion of realized vol out there in the Asian markets?
I wish I would have had more of it. That's all I'll say on that. But I'll tell you, this is an exciting day. It's Apple Watch Eve, in that when listeners are hearing this program tomorrow, when it actually airs, the Apple Watch will be out. So that's an exciting thing. Maybe some of our listeners are tired from being up at midnight getting their new Apple Watches, but we'll have to see where that goes. So that's one thing that I'm definitely looking at. I think that the Apple Watch is going to sell out. I don't see how it couldn't, quite honestly, with all the hype it has. But one concerning thing with which I have about Apple, the stock itself, is the fact that it's been going sideways for a while. And could the Apple iWatch have already been factored in, all the excitement been factored in? I think over the course of the next couple of weeks, going into the earnings announcement that Apple has towards the end of the month, no Mark Longo, it is not today, but towards the end of the month, I think that we could see some more movement. But with Apple itself, hold on tight, we got a lot coming. The other story of the day besides China and the Apple Watch, I think, is the oil stocks. XLE is up 1.6% on the day. So I think that with what's going on in the Middle East, I think with the things that are happening right now, the oil train is going to be going soon, folks. So I think it's if you want to jump on it, you have another opportunity, but do not hesitate. Will it go up in the next day? I don't know. Will it go up in the next year? I think it will.
So blast out those 30-handle XLE puts, right? Keep hitting them.
Well, of course. What other way is there to invest besides selling teeny premium?
That's the best way I know, sir. This entire empire was built on selling teeny puts. I'm not sure if you know that.
Really? You too, huh?
Yes. It's just free money. I can't see why you wouldn't do it.
I tell you what.
That does get to another listener question we have a little bit later to get to. See how many we have time to get to on the old program. But first, a few other topics crossed the old tape today that kind of interested us. Of course, it's that time of month. The beginning of the month, we get to look back on how the options market fared in the month of March, and perhaps not surprisingly, a bit of a soft month from an overall volume perspective. The numbers coming out of the OCC, that's the Options Clearing Corporation. For those of you who aren't familiar with it, they take all the other sides of your trades. Essentially, they reported about a 6% decrease from March of 2014. Volume of about 362 million contracts. Year-to-date volume, not surprisingly, if March is off, still early in the year. Year-to-date volume is down about 9% at this point from 2014 to about 16.5 million contracts. So remember about this time last year, and listeners, is when the Ukrainian crisis started really kicking off at February, March timeframe. So that certainly contributed to a lot of the volume we saw in the early parts of last year. The exchange-listed options volume, of course, that's the stuff you guys are mostly interested in, reached about 337 million contracts in March. That's down only 5% from March of 2014. And the ADV this year, also not surprisingly, down about 9% from 2014, with about 16.2 million contracts a day. Equity options volume, just swapping out the index, is about 308 million contracts, only down 4%. So depending on how you parse it, the numbers were not as bad as they may have seemed. Index options volume took the biggest hit, down 15% to 28.8 million contracts last month. And now, since we're talking numbers, I want to know, Uncle Mike and Mr. Rock Lobster, are you guys ready? It's that annual time that I know you guys love, I know our listeners love. We get to check in on the global derivatives market, play that nice, fun thing we like to call the global derivatives guessing game. Are you two ready?
I am ready.
As ready as I'm ever going to be.
All right. Get ready for some obscure Asian contracts and everything else. That's the best part of doing this. All right, let me just grab the old data and we shall dive right in. All right, here we go. I would play myself, but then no one could really be the maitre d', the host, the MC. And since there's only two of you on here today, you guys get the pride of place of having all sorts of fun. Let's start off with something a little bit relatively easy. I'll let you guys guess on, this is, of course, for the year 2014, so the entirety of the year of 2014. And listeners, if you didn't hear us do this last year, this is across pretty much all listed derivatives exchanges worldwide. So options, futures, international, et cetera. This is all compiled by our friends over there, the Futures Industry Association, through their global survey of exchanges. And I know some interesting trends here. But let's start off. What would you guys, I won't make you guess the number because that's crazy, but what would you guess, excuse me, worldwide, did the global derivatives volume increase or decrease by last year? And if so, by what percentage? Uncle Mike, we shall start with you. This is total, futures and options now.
I'll say it increased by 4%.
Wow.
Interesting. Mr. Rock Lobster, what say you, sir?
That's a good one. 4%, huh? I got to do the over-under. I'm going to say it increased a little bit more than that. I'm going to say 5%.
It's like guess the sizzle. It's a fickle mistress. If you guys,
so if it's 4.1%, I win.
yes,
I like that.
There you go. Closest without going over. Yeah, guys, we're on the right trend. If you're talking just options, you'd be closer. 3.1% increase for options last year. Only 0.3% for futures. Of course, overall futures volume a little bit larger than options volume. So the net increase was 1.5%. So you guys were
winner, chicken dinner. Woo!
You guys were on the right trend there.
Oh, Tusa, one up.
One up for Tusa. Let's see what else we can pull out here. All right, I won't make you. We'll look at the futures and options volume globally by region. Obviously, North America's going to be number one. What would you say would be the number two global region for total futures and options volume for 2014? Uncle Mike, we'll start with you this time.
You started with me last time.
That's right, I did. Twice in a row. There you go. Pride of place, sir.
All right. So am I breaking it down by continent, by specific exchange, or what are the...
I was going to have you guess the number two, just by continent. You don't have to go by, so like Europe, Asia, et cetera, South America, all that kind of fun stuff.
I'll go with Europe then.
All right. Mr. Rock Lobster, what say you, sir?
I'm gonna say Asia is the next one. It's eclipsing Europe for number two.
You would be correct, sir, by almost 2x. 7.2 billion contracts versus 4.4 billion for Europe. So Asia cranking it up. Of course, some of that is skewed.
Thanks.
They have some they have some contracts that are tiny notional value, so that kind of skews it a little bit. We'll get to some of those.
You didn't say that in the question.
Well, you remember it from last year. If you remember what some of the answers were for last year, they were somewhat dubious. So
umbrage.
Number three. Oh, he's taking the umbrage.
You
this
buy
time.
a future for one soybean.
Yes, exactly.
Soybean.
One soybean only. I like it. He's stealing your umbrage, sir. So yeah, number two, Asia. Number one, North America, 8.2 billion contracts. Number two, Asia, I should say, 7.2 billion, so a billion less. Europe, number three, 4.4 billion. Number four, Latin America, 1.5 billion, and all the rest is combined into other at about 400 some odd million. For a global volume of 21.867 billion contracts worldwide, listeners, for all of you playing the home game. Let's see. I guess you guys can probably guess the number one global derivatives exchange. I'll have you, and probably the number two. So why don't you guess? Let's try to guess the number three and below exchanges worldwide. Maybe Rock Lobster, we'll start with you this time.
For futures and options?
Yep, total. We're talking derivatives across the board.
Obviously, so let's say Board of Trade, probably one. Board of Trade CME, one. SIBO, two. Three, contract notional. The Euro one has been scooped up.
This is by total volume, not notional. So just total contract.
Okay, total volume. I'm going to say the ICE exchange, the ICE, the one that just bought the New York Stock Exchange and all that.
That's your guess for number three or number two?
Number three, yeah.
Okay. And Uncle Mike, where do you fall, sir?
Well, I would actually probably guess that the CME was number 1, 2, and 3, but
yeah, if you parsed it out, you probably would be.
So
if you broke up
at least
its constituent pieces.
Well, they all own each other now. What other exchanges are there?
Yeah, it gets pretty low pretty quick. Andrew hit on the number 2 one, ICE. That's kind of the clear number 2, particularly now that they include Amex and ARCA and all that other stuff in there. So it's CME number 1 with about 3.4 billion contracts, up about 9% last year. ICE, distance, actually not that distant, 2.2 billion contracts, down 11%. Last year, it's ICE, not ISE, of course, listeners. Number 3 is Eurex, the one you guys always forget there. And they, of course, remember,
yes.
they own ISE in there as well, so they have a significant U.S. option stake in there. ISE accounting for nearly 500 million or so contracts last year, down nearly 21% in market share. Not a good year for ISE. And then you mentioned SIBO, Rock Lobster. They don't come on the list till number 7, a distant number 7 with 1.3 million contracts. They're pretty much the first really exclusive options exchange here on this list. Of course, they have the CBOE futures exchange, but that only really accounted for 50 million contracts. C2 actually managing to trade 81 million contracts last year. I have no idea what those contracts were.
They're not the VIX, right? That's not the VIX contract.
Oh wait, did they add that to C2? The extended hour stuff, is that on C2? Maybe.
It's possible because the VIX does trade extended a little now.
Because that SPX PM kind of went the way of the dodo on the C2 version anyway. And that was pretty much the only thing they really had floating around there in terms of things they wanted to trade actively on C2. They actually, I believe, pulled it off. Yeah, I'm not sure what is trading there. That's a good question to ask those guys. All right, and then the rest, NASDAQ, CEPO actually eclipsing the NASDAQ group, which is interesting, of course, being a aggregate exchange group. So CEPO, SPX, and VIX keeping it afloat as we move on to some of the top categories. This is where things get a little bit, shall we say, fun and or obscure. My personal favorite, the top global agricultural futures and options contract for 2014. I'll give you a hint. It's the same as last year. Uncle Mike, we shall start with you.
I'm sorry, can you repeat that? The top agricultural futures contract?
Yeah, the top agricultural futures and options contract for 2014. Sir, the floor is yours.
I'll go with corn.
I think you said corn last year. And I was
wrong last year.
It was equally wrong last year as well. Mr. Rock Lobster, I'll give you a hint. Go a little farther afield.
Yes. I thought it was the Chinese bean contract, right? That was the Chinese bean contract.
You're right. In the area of the world, the actual contract is not.
It's not the mung bean or something like that?
It is the rapeseed meal future.
Oh.
From the Zhengshu Commodity Exchange.
That was my second guess.
Rapeseed. You forgot rapeseed. Last year, you forgot rapeseed too, and we had quite a few jokes at the rapeseed contract's expense. And of course, it was a banner year for rapeseed, up nearly 90%.
Oh my
Good
God.
grief. 303 million rapeseed contracts going up last year on the Zhengshu Futures Commodities Exchange. It's a 10-ton contract. That's not a one bean contract. So people are slinging rapeseed over there. That just goes to show the different focus we have domestically here versus some of these international markets. People always write in what the difference is domestic versus international markets. Well, some of the big products they trade very different than we would have over here. Then the number, you guys can fight it out for number 2. What's the number 2 ag contract there? Uncle Mike, we'll start with you.
Let's see. I'll stay with corn again.
I'll give you a hint. Corn does not. No U.S. contract pops up on the list until number 6, and it is corn.
Chinese beans.
Yes. Well, Chinese sold the Dalian Commodities Exchange, also a 10-ton contract for their soy meal, their soy meal future. Doing
meal, soybean, soy meal, whatever.
It's the same thing. I'll give you that one. 205 million contract left, down 22.7%.
Tucson isn't even on the right continent.
Yeah, he's all over the place. Number 3, white sugar. Number 4, rubber futures. Number 5, palm oil futures. All of those on the various Asian exchanges until you get to number 6, the CBOT. So yeah, not a banner year for domestic ag contracts last year, that's for sure. All right, let's move on to, I think that's a category that's probably more top of mind for a lot of our listeners right now. We were just talking about it a few minutes ago. This is, of course, the old Texas tea. Mr. Rock Lobster, we'll start with you. What is I shouldn't say the old Texas tea. I may have given it away there. But the old, the top energy contract for 2014.
Oh, the top energy contract? Well, you kind of did get, is it the WTI contract?
That's the question. Uncle Mike, which one are you going to guess?
West Texas contract.
Well, if he knows West Texas, I'll say Brent.
Yep, there you go. Brent is the winner. It's a pretty close race. 160 million contracts to 145. Those are the futures. They don't have the options on here. Let's see, the options.
Oh, that's crap. 15 million contracts. I got screwed.
The Brent options don't come in number 16. Only 13 million contracts last year. Let's see. So yes, and then as futures, ICE Futures Europe also has WTI. So maybe if you mix in the light sweet on NYMEX, and that's ICE, that's a different product. But yeah, it gets pretty parsed pretty quickly. Then you got the gas oil futures, Coke futures, Henry Hub natural gas futures, all that fun stuff coming in beyond number 2. Let's jump on really quickly here because we can do this all day. I like this. Let's see. Here we go. Let's guess the number 1 equity index future or option contract for 2014. Uncle Mike, the floor is yours, sir.
Number 1 equity index contract? Equity index future?
Equity index future or option?
I'll go with the S&P Mini.
The S&P E-Mini. Okay, Mr. Rock Lobster, what do you guess, sir?
So this is volume, right?
Purely volume.
Darn. I would have said the E-mini first, but I'll go to the S&P. I can't believe the standard trades more than the E-mini. Is there some Shanghai futures equity index future?
I mean, why don't we be fair to Andrew on this one? Why don't we guess number 2? Because I think that one's kind of a no-brainer.
I think it would be hard to be not the E-mini, but I would go if it was number 2, some Shanghai future.
Why don't we guess the number 2 one?
Well, you guys should probably keep guessing the number 1 one because you are both way off. The E-mini doesn't even make the list till number 5.
Wow.
So E-mini getting its doors blown off. You would have been better off if you guessed the SPY. SPY at number 2. The straight up ETF doing 609.
Oh, well, that's not a future.
I'm sorry, not the SPY itself, but the options on it. SPY options doing 609 million. SPY options just lighting it up. The number 1 getting off to the that contract size again. The Nifty options over there in NSE in India, the National Stock Exchange. It's a 50 Indian rupee contract size, doing nearly 1 billion contracts last year.
Holy gosh.
Wiping the floor with the E-mini and SPY options, though. Lighting it up. 609 million contracts last year. Blowing the door. I would have probably guessed, because of the broader reach. The E-mini still has yet to penetrate. I mean, obviously it has, but it still has yet to penetrate far into the retail masses the way SPY and SPY options clearly have. So interesting stuff here. Euro stocks, Kospi, a few other things. Let's see if we can grab one more here. This will be in your neck of the woods, Uncle Mike. Let's guess the number 1 metals futures and options contract for 2014. Uncle Mike, and this is your category. I shall toss it to you first.
Oh, my gosh. You're giving him the first shot on all the easiest ones every time.
You guys both swing for the fences and missed with the E-mini.
This is under protest.
Are you taking umbrage?
I am taking mass umbrage, size umbrage.
All right, here's your chance. Steal his umbrage, Uncle Mike.
I'll go with GLD then, if it's for the metals. Oh no, I'm sorry. I'll go with now it can be on an ETF as well.
It's just Correct. An option or a future. Doesn't matter what the underlying is.
Option or a future for a metal. All right, I'll go with GLD then. GLD options.
I'll give you guys a hint. It was the winner of last year as well. Mr. Andrew, the floor is yours. Do you agree or do you take some other choice?
I'm going to go with the standard gold options.
All right.
Gold future options.
I think we had the same discussion last year. Both of you horribly wrong, as once again you forget about the steel rebar futures on the Shanghai Futures Exchange.
I actually remember that now.
Yes, we had a big laugh about this last year. Another sizable contract, 10 tons. So they're slinging some rebar. It's not small potatoes. It's not one rebar. It's 10 tons worth. And this contract also up nearly 40% last year on the Shanghai Futures Exchange to about 408 million contracts. Blowing the doors off pretty much anything else we trade here domestically. The COMEX Gold, the futures, Uncle Mike, come in at number 6 with only 40 million contracts by comparison. Copper, everything else, all Asian. Silver futures on the Shanghai Futures Exchange. Iron ore on the Dalian Commodity Exchange. Copper futures, Shanghai Futures Exchange, all the way down. Stuff we trade here. Then the Spider options, the GLD options, Uncle Mike, come in at about just a hair under 30 million contracts. So by comparison, the iShares Silver Trust ETF options about 20 million. So yeah, by comparison, the rebar blowing the doors off. So there you go, listeners. A little bit of a trip around the world to some of the other products you may not trade or even be familiar with, but still are lighting it up around the world. And clearly from the results of this, Andrew and Uncle Mike are not familiar with these products either. Even though we did all this last year, I thought they'd remember at least the rapeseed. But no, everyone forgets the rapeseed at the end of the day. All right, and without any further foreign dalliances, we shall keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, you guys know the drill by now. It's time once again for the Odd Block, the portion of the show where we break down the weird, the wild, the wondrous, the woolly, the wizardly activity that we see lighting up the old tape today. First off, I don't even remember who won that that big. I should have been keeping score, but I was having too much fun listening to the back and forth debate. Uncle Mike thinks he won. Andrew thinks he won. Listeners, weigh in. Tell us who you think won the great / embarrassing global commodities debate. As we move on to our first victim here on the old odd block, this is ConocoPhillips, ticker symbol COP. Closing today an even $67. That in and of itself is odd, but that's not what caught our attention. No siree. It was the fact that this thing was lighting it up to the tune of, this does on average 23,000 contracts a day, almost 24,000, doing 58,000 today. Underlying also rallying pretty hard, up about 3.5% or a little over 2 handles today. So fairly robust day from an underlying perspective. And what caught our eye was a trade pretty close to home out in the May expiration cycle. Not the weeklies, of course. If I pull up the right strike, that would probably help. There we go. The May 70s, to be precise, listeners. When we started profiling these this morning, we saw a mega block of 16,398. May 70s going up. Paper selling for 55 cents. Again, one big block, obviously facilitated. As the day went on, more went on to the tune of about 4,000 more, about 20,722 going up total on the day. Takeover rumors, clearly a buzz. I think our friend here may have wished he held out a little bit. Like I said, the underlying rallied pretty hard today. These calls went out about 30 cents higher. They're 85-cent bid now. So, yeah, he missed out on a whopping 30 cents, 16,398 times, listeners. So do that math as I toss it to the Rock Lobster. What's your take here on our friend perhaps jumping the gun a little bit on these calls?
You know, I thought that he was low. I think he was closing a short.
Also, even though you think they went up sold, you think he was closing a short?
What the heck did I just say here? Yeah, he was closing. Did I write up closing a short? I could swear that it went up sold last, which is not necessarily a sold, that they sold the calls. That marker, unless I'm totally lost my mind on sold last, because they sold them. I don't know. I'm in a flummox on this one, Mark. I thought sold last was a.
You are flummoxed, easily flummoxed, sir.
I did. I'm looking at them like sold last. I thought that was a.
I'm pulling up the time and sales while we talk.
No. Okay, let's look at it. They traded on the offer, and you're saying went up sold last.
Well, I see the 17,000 lot, and then they canceled it.
Oh yeah, there was the 17,000 lot, and then they reprinted it at 55. I thought they were buying to close a short contract on the May 70s, even though it went up. It printed the condition was sold last. But I could be wrong.
Well, for our friend's sake, I hope you are correct, sir. Because, like I said, I'm searching through the time and sales now to see if I can find the exact. I see the cancel block. I don't see the replacement block. Sometimes they hide these things.
But I posted it saying it went up, marked sold last. But I thought they were closing a short contract. That was my my take on it, but I could be wrong.
Well, like I said, I'm going to lean your way, just if no other reason than to put some favor on our friend here, because if the obvious alternative that I was looking at is not very pleasant for him, so I'm gonna let him sleep well at night and thinking he closed out a short. In which case, you got to get it off when the thing's rallying 3 handles.
So this is what sold last means. Refers to a trade that is reported late and the last sale as reported as the price. So it's not necessarily, when I put up sold last there, it's not necessarily somebody sold them at that price. It was almost like an out of sequence type trade.
Yes, those out of sequence prints. And listeners, now if you're listening at home and you still have any questions as to why we hate those trade tags and say we don't rely on them for much of anything, those condition tags, because they go up late and they're usually out of sequence and sometimes they're just wrong.
And confusing.
Yes, and or confusing. That's why we don't rely on them. That's why we do this entire segment. We parse it ourselves because you can't rely on those things. So let that be a little bit of edumacation for our listeners out there who always write in and say, why don't you just look at the tags? Well, we do that. Trust us, we do that as well. That's one of the first things that we do. But then we dig a little deeper, because if you just went by the tags, you would be a very, very confused individual. Kind of like the rock lobster, forgetting about rapeseed. last year. As we move on to our next victim here on the old odd block. This is Crestwood Equity Partners LP. I know one of my favorite holdings. Certainly, I'm sure a lot of our listeners as well. Uncle Mike has tons of this in his own personal account. Ticker symbol, of course, I don't need to tell you guys, CEQP. But of course, trading $5.66, up about nearly 6% today. So a banner day for CEQP, and this is a stock, or an option, I should say, that does 127 contracts a day. So Uncle Mike accounts for the entirety of its float on a given day. Today, doing 3,200 contracts. A little bit farther out here was what we saw here today. In particular, well, a couple of things. Started off actually with some at-the-money July puts to the tune of the July 5 puts going up, and we profiled them this morning 1,800 times for 46 cents on splits. That's, again, of course, listeners, when they do two different prices and they kind of weigh the price as some sort of aggregate in the middle of those two, depending on the ratio of where they put the options up. We also saw some stock going up on this, 68,400 shares to be precise. That gives it about a 30 delta on the trade. So it seems to be your standard delta neutral here trade of puts and stock. Looking at a chart here of CEQP, it has been a, shall we say, a downward trend for the better part of the last year. This name was trading $15 not that long ago, back in about July of last year, and since then has just been pretty much just slashed all the way down to about 5.5 where it's trading now. Mr. Rock Lobster, take it away, sir, on these puts and stock. There also were, I should point out, some deep in the money puts, the July 15 puts also going up. So we could have our friend perhaps legging into a synthetic quasi-box here using some deep puts as well, going up 1,244 times on, not surprisingly, no open interest on the July 15 puts. So what's your take on what we saw out here in everyone's favorite CEQP?
This is I've seen a lot of this, and even when Tucson was talking about dipping his, toe into the XLE, I'm starting to see more of this big paper, like I'm going to buy puts and I'm going to buy stock on a ratio. That's what this CEQP, there was like, this went up delta neutral, and, and they're looking for kind of a bounce out of here. I mean, delta neutral on this, it looks a little textbook to me. I don't know if I'd go delta neutral for this. Like, what are you really going to get on the downside?
You'd go more 1-to-1 on this?
But yeah, they had, I think, 80, it was about a 30 delta option, and I think they had 86,000 shares go up.
Yes, you probably would lean more 1-to-1 on this and get that upside.
Exactly. I would be doing a little, or like 1.5-to-1 or something. I mean, you just don't want to go to get taken to the woodshed. But the July 15 puts, I think it was a stock replacement, given kind of the pricing went up, was like 20 cents over parity. So I don't know why anybody would do that, but I mean, it does pay a dividend. And it's still paying a dividend of 13 cents, apparently. So, all of a sudden now you have a name that's paying a dividend upwards of 10 cents. So I don't know how that's going to shake out, if it's going to continue to pay that once we have this next earnings cycle through. But I think this is a symptom of there is some kind of bottom fishing activity, looking at scooping at all these beaten up oil names. So kind of with Mike on this one. I started in like January, and I've kind of been adding a little every month, just special retirement account stuff. I can't disagree with them. There's some stuff I haven't been super aggressive on if there's been more aggressive action. But hey, I could be wrong, whatever. But you're seeing more of this type of institutional, I'm going to buy a big chunk of stock and buy some puts and just let it all go and see where it is. And that's what I think this particular trade was.
Everyone's reading Natenberg, learning about delta neutral, and saying, I'm going to do puts and stock. That's a trade du jour all of a sudden. Only delta neutral. They're not going to go crazy with the 1-to-1 stuff. Because why would you want that? Why would you want all that upside?
$5 stock.
Yes. Why would you want all that upside on a stock that's been crushed to death and is now $5? But hey, that's a conversation for another day. Maybe they should get some of this education we're talking about with our last name here. This is talking about New Oriental Education and Tech Group. And not surprisingly, this is an ADR listener. Ticker symbol EDU. I like that. Closing today, $25.79, pretty much unched on the day. And what we saw here was the old up and out to the tune of the July 27 OC 30 call spread going up. And we started profiling it about 733 times as the day went on. That pretty much went up about 2x to the tune of about 1,600 and some change on both of these. 1,626 on the Julys and about 21 on the OC 30s. 1,612 open on the July 27 calls and 0 open on the OC 30. So surprise, surprise. Again, looks like the old up and out roll. Closing out a short here on the July 27s. Getting a little bit too close for comfort for this guy here. Trading right around 25.80. He says, you know what, I got till July. I think we can hit this strike. I want to roll up now while the getting's good. Give myself a little bit more breathing room on the old upside because heaven forfend, I don't want my stock to get called away. Of course not. Why would I write a covered call and want my stock to get called away? So he's going to roll up and out to the old OC 30. Mr. Rock Lobster, take us home here on our friend doing the old up and out in EDU.
Yes, I think that's what they're doing. It feels like it was kind of like the ConocoPhillips trade where all of a sudden, the markets, especially this stock, I think it's up 20% in the last 2 weeks. It's just moving way too much for everybody. Kind of like ConocoPhillips. Okay, oil's going to sit in the basement. Those names aren't going to move, and we're just going to write calls against them and make tons of money this year. And all of a sudden, maybe there is some upside left in this market, as our diehard bull, Mr. Tusaw, would say. So I think they're just closing and rolling and looking for more upside. So that generally, that to me is kind of a bullish, at least that particular person. Still think there may be some room in these online education stocks, which have not had a very good 3 years.
Yeah, it hasn't been the best sector to be in of late.
No,
maybe
destroyed.
Our friend here thinking maybe the time has come but not wanting to be too crazy and roll those calls a little bit, just in case. Yep. All right, good stuff here. Now we're going to keep on rolling. We've been gassing on a lot today. A lot of stuff to talk about today, though. I want to make sure you guys get on the show, too. So without further ado, we'll dive right on into the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Like the man said, this is the portion of the show where you guys get to write in. No shortage of ways for you guys to do just that. Questions at theoptionsinsider.com, twitter.com/options, facebook.com/theoptionsinsider, stock twits, we're Options Insider over there, or just step on over to the website, post a comment, leave us a comment or question on the website feedback form. No shortage of ways for you guys to do that, and most of that is baked into the app, at least on iOS. I'm not sure if it's either on Android. I'll have to check. Some of you have written in asking about that. But again, no shortage of ways for you guys to write in. A lot of you have done just that. I want to start off, though, with the listener mail I mentioned at the top of the show because this one certainly stands out to me. This is our frequent commenter, Mr. Mark Brant. He wrote in today and saying, we were joking about this in the previously how much content we have on the archives of this network. Well over 1,000 hours worth of content and well over 1,000 shows. 400 some odd just in the Option Block program feed alone. And I said, I dare you out there, anyone out there who is staunch of heart to listen to all of it. And he wrote in this morning and said, by the way, I listened to all of the episodes of all the shows. Time flies. So he gets the award for the super listener of the day, definitely. Thousands of hours of Options Inside. That's a lot of Andrew to digest, let alone a lot of Uncle Mike and a lot of me, certainly.
I don't even know if I could handle that much.
I don't even listen to all. I can't. Like, we do so much stuff. And I listen to the shows I'm on, obviously, because I'm on them. But there's so many shows you put out daily. Andrew puts out a show daily. I don't have a chance to listen to that every day. I try to. Every day. Dan Passarelli does a show every day with us. I don't have a chance to listen to that. I try to every day, but I don't have a chance to listen to that. We have other stuff coming in. The OIC show. I don't have a chance to listen to that on a regular basis. The Options Playbook radio show. I don't have a chance to listen to that. That's weekly. I try to catch up on those. Sometimes I miss one here or there. So I'm sure I'm probably a few hundred episodes behind even him. So he gets the Super Listener Award. I told him we're going to send him some nice swag of the Options and maybe a cool shirt like I gave you, Andrew. That's a popular one. That black and white one. That every time I stopped wearing it at conferences, Andrew, because people always stop me asking for them.
You should just sell them. It could be a cottage business for you.
I had it. It was the only clean shirt I had left at the FIA show a couple weeks ago. I said, I don't know if I should wear this on the final day. It's kind of playing with fire. And I did. Sure enough, about 5 different people, CEOs of major firms, asked me if they could have shirts. So, yeah, everyone's trying to scam that shirt. So that's a collector's item you have there, Mr. Rock Lobster. Maybe we shall herald Mr. Brant there with one of his own, because it is, and we don't mess around here. Cool, high quality Lands End good stuff. None of this garbage t-shirts and clothes for our listeners. Only the best Options Insider gear for our listeners. And since he listened to so much stuff, we shall favor one of his questions as well. He's been going on about this strategy from our guys over on the Advisors Option Show, kind of taking the SWAN process. You're familiar with that, Andrew, and breaking it down using weeklies, selling. I think what was it here? He wrote it out here. Selling a one by one, selling the week 2 weekly option, selling the week 3 weekly option. I'm assuming on At the Money, weekly straddles he calls them, and then buying the week 7, get a credit, get the theta, delta positive, et cetera, and then roll it forward every week. And he wrote in to say what would be the best time to close out like the week 1 shorts. And it's kind of a good question for a lot of our listeners too, who are probably still scratching their heads, saying, when is the best time to close out those weekly shorts going into the expiration? Do you want to close it out early in the day? Do you want to kind of wait towards a little bit later? But of course, that becomes very perilous, because the closer you get to that expiration day on the weekly expiration, the more short gamma you have, the gamma explodes. It becomes a nasty beast to have to maintain. So you want to close it out probably a little bit earlier on that day, on that side, to be safe. I always like closing stuff out going into expiration day. Don't even bother with it. But if you still have it on expiration Friday, by all means, close it out sometime early in that day. We'll start with you, Mr. Rock Lobster. Would you concur with that, or do you want to close it out like a week ahead of time? You just don't want to touch them.
I'll say I'm not a fan of holding too much short premium that's expiring that week. It's one of those things that it works and then it doesn't work. It just gets ugly so fast. What I would say is the guy has if you're going to maintain that, you have to have a pretty tight stop on it, and that can only be the trading day. Your biggest problem with those are just gaps. You get the gap down, and then you're kind of hosed. So I would prefer to close them 1 week prior, but if I sold a week 2, I'll take the premium and be very, very happy, right? Very, very happy on that one. So that's what I would say. That would be my personal thing. If you have a straight up 1-to-1 contract, this one's kind of a little bit of a ratio. I would say, close that stuff a little earlier and be happy that you could.
Yeah, definitely want to err on the side of earlier rather than later with these. Uncle Mike, where do you fall on this great debate, sir?
I think I'm in a similar camp, in that my general rule, if I'm doing some type of short put or short call, if I can ever get 80% of the credit of what the actual credit is, I'm out of it. So for example, if I sell an option for $1, if I can get out for a debit of 20 cents, that's my general rule on it. But in this case, if you're playing both sides of it, something along those lines, I think that the last day is a very tough day to get out. And if you're playing time decay along those lines, I think it's going in that close to the end like that on something where you're playing both sides is a very difficult thing to do. Like Andrew said, it works and works and works until it doesn't. And the time that it doesn't work, you're in a real pinch. So I think that in general, I subscribe to it's better to be a live chicken than a dead duck theory.
That's a good way to put it, sir. Let's see if we can squeeze one in. But again, congratulations to Mr. Mark. You'll be getting some cool gear. If anyone else wants to take the Options Insider Challenge, write in. Let us know what you thought, which ones you listened to, which order you did it. And I'd be curious to hear how it unfolds. It's a lot of content. 8 years worth of content. Some good stuff in there. Some of the early stuff, perhaps not so much. I blame that on Andrew, even though he wasn't around back then. We were still feeling our way into this whole radio thing back there. But a lot of good stuff on there. Let's see if we can find one more. Here's a fun, silly one to end up on here. This one comes from NJay. He writes, out of the money options are reasonably priced. Should I buy them? Disabuse him of his notions. We'll start with you, Uncle Mike.
Yes, buy them by all means. Just because an option is out of the money does not mean it's a bad thing. My favorite story about an out-of-the-money option, just in a way with which I used it, was a couple years ago when everybody thought that there was this big oil company that had this nasty spill in the Gulf, and everybody thought that company was going to go bankrupt. And I had a client at the time. He had said, Mike, I got to short this stock because this company's obviously going bankrupt. I know they're going bankrupt. And the stock was, I believe, around $40. And I said to him, well, if you short 1,000 shares of this, that's a pretty big risk with what you're taking on with this. And so eventually what we had decided to do is just buy some 30 puts. I had no opinion on the stock one way or another. It was just one I was staying away from. And so we bought some 30 puts, and the stock went up when everybody thought that it was going to be going bankrupt. The stock was BP, by the way. And that was a case with which out-of-the-money options were a good thing to buy. So with that, I think that if you want to take a relatively small amount of risk and are willing to pay for it, out-of-the-money options can be a great thing. If you are looking to make it a regular part of your practice or regular part of your trading, then I think you really need to have an understanding of what is reasonably priced, at what vol are you looking for, and at what point in time would you buy an out-of-the-money option? Would you hedge it a little bit from the standpoint of vol or time decay while selling another option against it? You need to have a locked-in system for it. But in theory, in general, are out-of-the-money options a bad thing? Absolutely not.
Mr. Lobster, counterpoint, sir. Crossfire, debate. Jane, you ignorant
there was
sluts.
a report, actually, we have one of our clients is a professor of finance, and he thought there's a report that came out that, just, I guess, near the money options are not overpriced, because there's skew reasons, I think, of other stuff. I think near the money options generally are not overpriced as in some other ones. Out of the money options can be reasonably priced if you give them enough time to do whatever you need to do. For the most part, there's the way the model works, they're adding a lot of that upside curve because of the log normal distribution, which, the log normal distribution I think is good theoretically for 1 year options. For options that you are 2 weeks old, maybe not the best assumption. So I think a lot of that out of the money juice is probably a little bit expensive. So I would say is, can you make money buying them? Yes, as long as you have a reasonable expectation of what the underlying can do while you're owning the option. Because essentially, when Mike was saying, when you buy an out of the money option, you're almost more exposed to a change in implied vol than you are a change in the underlying, which generates the value of that option. So, can you make money on them? Yes. Do they have a role? Yes. You have to have a reasonable expectation for what you're trying to do with them.
I was looking forward to a nice, lively point-counterpoint, but you guys agree far too much. It's no fun at all with you two. No, of course, it's a great question, and of course, as long as you're know what you're getting into, you don't just kind of, a lot of people we see coming in, especially first-timers come in, they look at options, say, I want to do that, I want to buy a call on Apple, whatever. Oh, hey, these things are kind of expensive. I'm going to migrate to 20% out because they're a hell of a lot cheaper, and I can buy 100 of them as opposed to 10. And that kind of mentality, that doesn't really last very long. It doesn't work very well for all the reasons we've outlined many times here on the show. But if you use them properly, perhaps also in verticals is a good way to use out-of-the-money options, as in buying more expensive, better, quote-unquote, meatier options, and then selling the out-of-the-money ones. That also works as well. But good question, Mr. NJ. There's a lot more to get to. Unfortunately, that's all the time we have for the mail blocks. Also, all the time we have for this extra global spectacular episode of the option block. We went all over the place. We went to Shanghai. We went to Europe. We came back here to domestic stuff. We made fun of Uncle Mike and Andrew a little bit for forgetting rapeseed. All sorts of fun stuff. But before we go, as always, really quickly, let's do a combo around the block / what's coming up with you guys. Perhaps we'll start with you, Mr. Rock Lobster. First off, what are you watching for the rest of the week into the weekend? And then what's coming out the pike in the land of the pit?
I'm watching this China stuff. If this is going to be an opportunity for it to burst farther along, or the bubble to just get out of the balloon one way or the other. And I'm not sure. I'm looking at if we can kind of creep up to those all-time highs again. it feels like the let's call it the geopolitical needle seems to have notched down a little bit. And stocks like certainty, and I think we're seeing a little bit more of that. And, there's nothing like this China buzz here that's happening to get people a little bit more giddy about equity. So, and I'm watching to see if VIX can wind its way into the 12 handle and stay there for more than like 20 minutes. Because the lower the vol winds, the more certain people are, and that generally is, equities like that. So we will see. And I'm also keeping on just these oil exploration drilling companies that are still trading, really not very far off their lows of the year. So it might have had a little bounce, but it ain't a very big one yet.
All right, Uncle Mike, same question to you. What are you watching and what's coming up in the land of RCM?
All right, watching a couple things. Watching the Apple iWatch news for this week to see how that goes. Check out, like Andrew said, China, FXI in particular is the ETF with which I watch. Checking out oil to see if we can start making some headway with the with it bouncing as it has, and just watching to see if we actually can do something with this market this year. We've just been on SPY, for example, we top out at 212, we bottom out around the 198 level. And so it would be nice if the market would do something. And I'm waiting for it to break out. With that, it's always buy the dump, sell the hump, don't diddle in the middle. And right now we're still diddling in the middle. In terms of what's coming up in the world of RCM, aside from my Call Stupid webinar that we're going to do on rebar as well as rapeseed, it is the very tail end of IRA season. If you can get a hold of me soon, feel free to do so. But if not, we'd be more than happy to discuss any other issues, financial concerns, or anything from an option trader's point of view. Feel free to give me a call, folks, at 312-212-3531, or send me an email at mtusaw@rcmfs.com.
All right, listeners, drop him a line. I think you'll like what he has to say. For you, on behalf of Uncle Mike and the Rock Lobster, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing, and of course for some of you for listening to all thousands of hours of our content. And we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.